Hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips, rocking and rolling, 24th of July, 2016. No trade calls or recommendations. Everybody's sponsored their own stuff, and we're here for educational purposes only. And the fact that you're listening to this means you've read, you understand, you accept all the disclaimers on the website. Okay, guys, what's going on? What's going on? What is going on? Well, we're going into an interesting week, which could start off with a little bit of wait and see, but it should be interesting by the time we get to the end of the week. Okay, so we'll start off with the German IFO. We got some consumer confidence on Tuesday, but really it's all about the FOMC on Wednesday, and then we've got basically those revised monetary policy coming out of Japan, which should come out, Thursday and Friday. We've got that BOJ outlook with press conference too. So it's really, are we going to continue to get this easing base? Are we going to get something out of the BOJ? If we get something, how big is it going to be? Is it going to be this famous, some kind of form of helicopter money? If not, so it's all question is, are the central banks going to disappoint or not? Okay, so basically not an awful lot has happened since last week, so the update's going to be fairly quick. So let's look at this gold. What's going on gold? So we talked about the fact that we were stuck here and failures at 1350s. We're looking for price to try and make its way back down into this 1300, right? And basically it's basing here in this support zone. So going into the week, as long as we hold, we expect this to try and grind higher. If the ES, if markets continue to try to break higher, then we would expect this to come lower. It would make sense, come into these two moving averages, the 50 and 100, using the 1300 as a base. As a reminder, we're still stuck in this range, which is 1400 to the upside, 1350 mid, 1300 low range. Any close from a daily basis below the 1300, then we would expect that probably what's happened is the markets have really gone skyrocket, and this is going to try and correct much more, probably back into 1250, but we expect this 1300 to be fairly solid support. Talking about the markets, ES, we're stuck inside this resistance zone. Basically to the upside, we have 2194s protecting the psychological 2200 number, right? As long as we hold here, any closes below, we'd expect those 2133s to come calling. Reminder, we broke out of that range basically, which was 2000, 2050, 2100, and as long as we hold above that, we expect this to continue to try grinding higher, making new highs. So going into the week, the bull bear line is 2165s to the upside, attract those 2200s, 2194s protecting below 2133 pivotal. Any daily close below, we expect this to move aggressively back into the 2100, which was the old top of the range, which should be fairly solid support, right? It's all about those highs. It's all about the central banks. Canada, as we said, if anything, we expected that 129 to hold for a sloppy and tricky rotation all the way back up. As long as these whole series of higher lows hold, we expect this to slowly try and make its way back into the 135 mark. Reminder, healthy markets don't go from A to B in a straight line, but we expect this to try and move higher. Ideally moves into that 200 tags, uses this previous resistance as support, and then continues its way back up into that level. Aussie, we discussed the rotation back down. We consider this a very aggressive failure. We expected this to come back down into this whole cluster of moving averages. The way this is trading, we would expect any rallies to get sold for a continuation lower back down to this lower end of the range. Crude, no change in outlook. We are still calling, we've been talking about this for quite a while. We're looking for this to come all the way back down into the 42.40s. We discussed last week in the session we recorded live, so it's on YouTube, in a lot of detail, all the levels at crude and why this is such an important bull bear line both for the upside or the downside. But in any case, this is the level that's attracting as far as we're concerned. As far as Kiwi, again, we talked about this a lot. We said we just don't understand why anybody would want to bet against the RBNZ. The RBNZ came out, confirmed again that they want to cut, very bearish on the Kiwi dollar, and again moved all the way back down into this level of support going into the week. You'd expect a little bounce here. The big question is this previous support zone going to get sold? And as long as that gets sold hard, we wouldn't be surprised to see this continuing the move down, potentially all the way back into the 67s, 6750, 6700. Now the big question is, there's always, when you get these aggressive moves, there's always a risk of some kind of a correction, or there's almost some kind of risk of the central bank disappointing. But the way this is trading, the way the RBNZ has talked about things, we really wouldn't want to bet against them. We're not in the habit of betting against central banks, so we'd expect this to continue to stay heavy, same way as the Aussie, and it kind of fits in with our general dollar strength view. Yen, we talked about the fact that this was only trading on BOJ headline risks. So again, we had a little wheeling and dealing here with that false headline. We talked about the fact that the levels we were looking at 107.50, 105.50, and that we needed to see a daily close below or above to get any kind of Momo. And you see how beautifully this has been reacting, even on the false headlines in brackets, whatever you want to call it. Smike back up, 107.50 sold, and on the puke back down, 105.50 bought. So not a lot has changed from last week. We're still stuck here, and we are waiting for BOJ to deliver or disappoint. Now, at this point, you'd have to think that after all is said and done, after all the hype, if they disappoint, you really wonder if they really deserve a job or not. But anyway, that's a discussion for another point. Don't be surprised if you see a lot of wheeling and dealing, but it doesn't change. From a day perspective, daily closes below the 105.50. We'd expect 103.50s to come into play. Daily closes above the 107.50. We would expect the 110.50 to come into play. So no big change in outlook. But again, remember, disappointment or not out of the BOJ, there's a potential for a bit of a silly move. But again, I think these ranges are fairly decent to capture 8 times out of 10, right? Euro, what's going on Euro? So as we said, we wouldn't be, Euro is very heavy, and as long as it continues to hold below the 10.50, we expect it to continue to trade heavy. We just find it very hard to play for shorts into this kind of support zones. So keep an eye on what's happening here. The way this is trading, most likely any bounces into the 10.50s, unless it's on a headline, will get sold, and the market will likely try to take out these lows. But we don't think it's a very interesting place to play. Now, should we get any daily close above the 10.50, we would not be surprised to see the 112s come into play very aggressively. But again, it is what it is. It's one of those markets when we've had a lot of wait and see. We've had a lot of nimble tactical opportunities intraday, but it's really a wait and see game. We need to get this FOMC out of the way. We need to get this BOJ out of the way, and then likely we'll see some more movement. But for now, it's the action is most likely stacked to the back end of the week, Wednesday, Thursday, Friday, and then we'll be in a position to see if we can get some larger moves taking place. Okay, guys, I hope you enjoyed it. Thank you so much for sharing. Thank you so much for supporting these and listening to these. Hope everybody has a great week, and stay away from all the madness out there. Bye-bye, guys.